back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, it was a good start to the week. Nothing to really complain about given the fact that the Nifty has managed to hold on to that 18,600 mark. In fact, just a shade below that crucial level. And Sensex also, amassing a cool 250-point rally in today's session. Mid and small cap end of the markets were also pretty steady. If you look at the sectors, banking pack is doing well. Remember, we have the RBI policy this week, and before that, some bit of gains coming in on the Nifty Bank Index. However, PSU banks weren't doing all that great in today's session. Aside of that, auto index, of course, that deserves mention. That index has hit a fresh 52-week high. In fact, shares like Tata Motors and M&M were high flyers when it comes to the auto basket. Tata Motors hitting an all-time, in fact, 52-week high, and M&M emerging as the top Nifty gainer with gains of somewhere around 4% or thereabouts. Among the losers, OMCs were under pressure given the fact that, Brent oil rallied to $78 a barrel after Saudi Arabia has announced a cut of 1 million barrels per day from July, and that is of course being done to jack up prices which were languishing around that $72 per barrel mark. Aside of that, if you look at the losers, Divi's Lab, Tech Mahindra, Asian Paints, Nestle and BPCL. So FMCG pack not doing as well. On the gaining side, we have M&M, Axis Bank, Tata Motors, L&T and Tata Steel. Among the mid-cap gainers, you had the likes of Mazgaon Dock, you had Cochin Shipyard and SCI. So really the shipping companies doing well. On the losing end, you had the likes of Indoco Remedies, Cyient, Brightcom, Aegis Logistics and thereabouts. Well, so lots of action in the mid-cap end of the market, and of course even the large-cap end of the market, given the fact that we had quite a few high flyers in today's session. But on that note, let's take a look at the top stocks that are on my radar this afternoon. Starting with Tata Chemicals. Now, this stock has rallied amid very high volumes. In fact, two triggers really for this rally. First of all, it has announced the restructuring of its US operations. Now, the holding structure of US operations has been kind of revamped given the fact that they are looking to reduce the number of intermediary entities. So, Tata Chemicals Soda Ash Partners is undergoing a transformative conversion, in fact, from a partnership into a limited liability company. So, as part of this transition, the entity will be rebranded as Tata Chemicals Soda Ash Partners LLC. Now, the bigger trigger, of course, will be the partnership that Tata Group arm has inked with the Gujarat government. In fact, it's a $1.6 billion MOU with the Gujarat government to set up a iron lithium battery unit. Now, this this unit, in fact, if you look at Tata Chemicals, the main focus is on soda ash. Now, soda ash is used in manufacturing lithium ion batteries, and that's where Tata Chemical comes into play. It is entering the lithium battery space to provide backward integration to Tata Motors EV space in both domestic and JLR segments. Now, the company's first lithium ion battery will be rolled out somewhere in 2024. And aside of that, the company also has the presence in the agrochemical space through its subsidiary Rallis, along with its recent entry into the specialty chemical space. So, this could give it edge over its peers. In fact, valuation wise, the price to earnings ratio for Tata Chemicals is 10.9x or thereabouts, which is much lower than its sector PE of somewhere around 48.2. So, this makes the stock a little cheaper versus the rest of peers in the sector. And aside of that, if you look at the fund action, or in fact what the FII community and domestic mutual funds have been doing with the stock, well, both domestic institutions and foreign investors have increased their stake in the company in the quarter gone by. So, this entire EV, betting on the EV space is something that will drive gains for Tata Chemicals. Stock has not done all that poorly in today's session. In fact, it has rallied somewhere around 5% or thereabouts. So, that's one stock to watch out for. The other counter to watch out for is Info Edge. Not very good news coming in for the stock given the fact that Macquarie has added the company to its sell list. In fact, it has an underperform rating on the company with the target price of 3,000 rupees or thereabouts. Remember, the stock is somewhere around 4,200 or thereabouts right now. Now, Macquarie says that the bull case of upside is just about 5%, whereas the bear case is somewhere around 50%. So, it's the chances of a downside is around 50% going forward. And Macquarie has said that it sees slower growth in Naukri business going forward. In fact, it also expects no clear path to profitability when it comes to verticals like real estate and matrimony and thereabouts. Remember, the company had taken taken write-offs in two of its investee companies, 4B Networks and BizCrum Infotech. In fact, it has, if you remember, a couple of days ago, we had news that the company has initiated forensic audit in its into its investment in 4B Networks. It had taken an impairment of somewhere around 280 crore rupee or thereabouts. Now, if you look at the stock, the return ratios haven't been all that healthy. That makes the stock a little, unattractive at the current juncture. Foreign investors had, in fact, decreased their shareholding in the last quarter. So, this is one stock that has come under pressure. We'll have to see how things pan out for the company from here. Aside of that, the other stock on my list today is Wonderla Hotels. In fact, hotel space, as we all know, is buzzing with activity given the fact that there is a lot of demand for travel and hospitality, and we've seen that play out in stocks like Lemon Tree, Indian Hotels and thereabouts. So now this stock in particular is in focus because Tamil Nadu government has waived off 10% local body tax. And now this tax waiver will be applicable from now, in fact, for the next 10 years from the date of commencement of commercial operations. So that means that, the commercial operation will start somewhere around next year or at the earliest possible if they have to really avail of this tax benefit, because it is applicable only from within 2 years from the date of commencement. Aside of that, the company had reported a strong set of numbers in the fourth quarter. So that's something that is boding well for the company. And if you look at the stock, it has literally doubled in the last 1 year. In fact, price to earnings ratio somewhere around 20.7. That's lower than the sector PE of 66.5 or thereabouts. And if you talk about fund action, in fact, what the FI community and domestic mutual funds have done, foreign investors have decreased their space, in fact, decreased their stake in the company, but domestic mutual funds have increased the same. So looks like this stock is in for a good set of, good rally in the coming days, given the fact that, there is a lot of buzz in the hotel space. Well, I think these were the three stocks on my radar this afternoon. With that, I think we've come to the end of this edition of Closing Bell. But of course, I'll be back with the markets tomorrow morning at 8:30 a.m. So don't forget to tune in. But for now, if you have any comments, send them in to us in the comment section below. And of course, keep following us on Moneycontrol for all your news and financial updates. Thanks a lot for watching. It's a goodbye from me.